PM Tan Sri Muhyiddin Yassin has unveiled the 150 billion Economic Recovery and People's Protection Package, or PEMULIH, with the aim of bubble wrapping the people and businesses, as well as beefing up the national vaccination program. PEMULIH includes a fiscal injection of 10 billion ringgit. Among the measures revealed include more assistance for the B40, with households receiving 500 in August and 300 in December, with bachelors receiving 200 in August. M40 households will also receive assistance to the tune of 250 in August, while M40 bachelors will receive 100. The government will also give 500 ringgit assistance to those who have lost their jobs. Also included, allowing people to withdraw 1,000 per month for 5 months under the Employees Provident Fund's iCitra. There will also be an electricity bill discount of between 5 and 40% for domestic users, with 346 million to be given for 3 months. As for businesses, micro SMEs will receive an additional assistance of 500 in September and another 500 in November. The government is also removing the 4,000 ringgit limit for salary subsidy program and will provide a salary subsidy of 600 per worker for 4 months. There will also be a 6-month moratorium for all individual borrowers and micro entrepreneurs, and no documentation will be needed as all applications will automatically be approved. The government has also agreed to postpone monthly income tax installment payments for companies and waive tourism services taxes for hotel operators until year end. Muhyiddin also unveiled some extra help for the sectors hardest hit by the pandemic, which includes 100 million for those in the creative arts sector and 3,000 one-off assistance for more than 5,300 travel agencies. As it becomes clear that mass vaccinations appear to be the key to repairing the economy, the government is allocating 400 million to increase the national vaccine supply to cover 130% of the population. Another 200 million will also be allocated for 29 new vaccination centres and to upgrade existing ones, as well as to introduce drive-through mobile vaccination centres and for outreach home-to-home vaccination programs. There will also be a 150 million allocation for the public-private immunisation program. Malayan Banking announced today that its Group CFO, Dato' Amirul Faisal Wan Zahir, has tendered his resignation, which will take effect on July 15th. Amirul Faisal has conveyed that he is resigning to take up the position of MD of a government-linked company, according to a statement by Maybank. The Edge Weekly, quoting sources, had reported that Amirul Faisal would take over the helm at Sovereign Wealth Fund Khazanah Nasional, a role currently held by Dato' Syahril Ridza Ridzuan. Besides holding several positions at Maybank, Amirul Faisal also held notable positions at Pemodelan Nasional and Chemical Co. of Malaysia. Maybank President and CEO Dato' Abdul Farid Alias says that Amirul Faisal has been an integral member of the Maybank Group Executive Committee and that the board and management thank him for his service. Maybank has commenced the process of identifying and selecting a new Group CFO and will make the announcement when a decision has been made. The bottom continued to drop from Suba Dynamic Holdings counter as its share price closed at a new low of 32.5 sen, a drop of 20.7% from last week. It was the most actively traded stock on Bursa Malaysia, with over 612 million shares changing hands. It was reported by Bloomberg that substantial shareholder, the Employees Provident Fund, was gravely concerned over the latest developments taking place at the oil and gas firm. In an email statement to Bloomberg, the EPF said that it is urging the board to urgently proceed with the conduct of an independent review and take action to resolve all outstanding issues. The EPF, Suba Dynamic's third largest shareholder, has been gradually reducing its holdings and currently holds a 7.6% stake, down from 10.2% on June 3rd. Suba Dynamic has made multiple headlines ever since it decided to sue former external auditor KPMG for allegedly being negligent. KPMG resigned as the company's external auditor last week, which was followed a day later by 5 of its directors also putting in their walking papers. At least 3 research houses have lowered their target prices for MyNews holdings after it announced its largest quarterly loss since its listing back in 2016. CGS-CIMB Research lowered its TP from RM1 to 91 cent, while RHBIB Research dropped its TP from RM1.25 to RM1.20. Kenanga Research reduced its TP to 95 cent from RM1. To recap, MyNews' net loss widened to 10.32 million for the second quarter of FY21, compared with a net loss of 2.33 million reported last year in the same quarter. Revenue dropped 16% to 103.9 million ringgit. All 3 research houses noted that the poor results were caused by weaker than expected footfall as a result of the intensive lockdown prevailing throughout the period under review, including MCO 2.0. Compounding this were a number of outlet closures as its total store base dropped to 518 as at end second quarter from 539 as at the end of second quarter for FY20. CGS-CIMB analyst Shazwan Aimin Sobri notes that the instatement of the total lockdown from June 1st will likely cause a subsequent dip in footfall and revenue, as the average sales per store seem to correlate closely with the severity of movement restrictions since the start of the pandemic. However, RHB analyst Sung Wei Siang says MyNews' earnings growth prospects still remain exciting with the launch of South Korean convenience store chain CU. Ultimately, some analysts do believe that MyNews stands to be a prime beneficiary of the gradual return in footfall upon vaccination reaching critical mass. The Naga Nasional says that the government has decided to maintain the imbalance cost-pass-through rebate of 2 cents per kilowatt-hour for all customers, including domestic users, with monthly electricity consumption of 300 kilowatt per hour and below from July 2nd to December 1st, 2021. This is taking into account the overall reduction in actual power generation costs from January to June 2021. In a BOS filing, TNB says any shortfall or excess in the ICPT will be funded or transferred to customers via the Kumpulan Wang Industry Electric Fund to aid in stabilization of electricity tariffs in the future. TNB also points out that the impact of ICPT implementation is neutral on the national power provider and will not have any effect on its business operations and financial position. The ICPT is a mechanism that allows TNB to reflect the increase or reduction in fuel and other generation-related costs in the electricity tariff every 6 months in the form of rebate or surcharge. TNB says that between Jan and June 2021, the average base tariff remained unchanged at 39.45 cents per kilowatt hour.